Good morning. Welcome to Bazaar Morning Call. You're joining us live from the CNBC-TV18 Motilal studio right here in Mumbai. I'm Sonia and joining me is Surbi and Nigel this morning. Well, folks, it's the penultimate day before the weekend, the Friday coming up tomorrow. But, for the market, I think it's sort of been ho-hum. The Dow had a decent session. It recovered quite a bit actually from the lows. So in that context, let's see how our markets shape up. Still, minor bit of red tick is what you saw on the Dow by the end of trade, but there was a good intraday recovery similar to what we saw in our own markets and the other markets as well as S&P 500 and NASDAQ ending in the green. Now, a couple of things, right? The payroll numbers in the month of February were stronger than expected, and that actually reaffirmed the strength of the economy, and perhaps that will give the Fed a little more leeway to raise rates as per what the dot plot is. Oil has extended its losses, so Brent crude is now below $83 a barrel. This morning flat, but largely it's been under a bit of pressure. It's the rate hike concerns that has caused the sell-off across the board. Powell reiterating his higher for longer stance on rates, however, saying that no decision has been made just yet. Now, the street fear has been for the last couple of days that the Fed may increase rates to as high as 6% in the month of September. But the question we're asking this morning is, are the street fears priced in? Because for the Indian markets, it's been the third day of gains, and now the Nifty is up almost 450 points from the 2nd of March low that we hit, which was around 17,300, 17,320. So that's the big question. We've seen gains for 3 days now. The Nifty has found support at that 17,400 level. So is this a base for the market? 17,300 to 17,400, is it a base? And on the upside, where do we go? The next level, I think, to watch on the upside would be around 17,800. That's from where the retracement began on the 20th of February. So it's largely in a band, this market, 17,400 to 17,800. There's nothing to suggest that this band may change in the near term. There was large FI buying yesterday, but it was courtesy the Shriram Finance block deal as well, so keep that in mind. DI is selling about 930 crores thereabouts. But largely, you'd have to say the SGX Nifty very, very quiet this morning. The market has been trending higher for the last many days, so looks like you perhaps are wearing the right color this morning. You never know. But the bulls at least are tightening their grip a bit on the market.
Oh, absolutely. There's no taking away from that, Sonia. Yesterday's move was just, in one word, breathtaking resilience. That's all it was, right, compared to the kind of cues that we got in with. Now, I've been asking myself this question for the last 24 hours. What is really priced in? Can you price in everything in one day and move on? I mean, that's what the markets seem to be indicating. Right now, everything is very muddled. All cues. Yeah. The SGX isn't telling you anything. The US close didn't tell you anything. Yields are doing what they are. So at least I'm looking out to the yield markets for most of the cues, at least the immediate cues. And that's where the picture gets really, really interesting. So the question that Sonia asked, is it all in the price? Well, if you're looking at the next Federal Reserve meeting, that's coming up in about 13 days' time. Before we get to that meeting, tomorrow is a huge day because we get the real jobs report number. Remember, it was the January report that really set the cat among the pigeons. We need to see what's happening in February in terms of the overall unemployment picture in the US. Right now, 78% of the Fed funds futures, they're talking about a 50 basis points rate hike. So the question is it done here? So you do a 50 basis points, is it a given? The market's priced in that the Fed will stop somewhere around 5.5 perhaps, and then life gets back to normal course. If you're in that camp, then obviously you want to go out there and buy the dips. The other fact of it is that the yield curve continues to steepen. It is inverted. We are talking about that. The steepening is only increasing. Even yesterday, the two-year yield continued to move above the 5% level, 5.03, 04. The 10-year is still just around that 4% mark, just below 4%. So that's the one question to ask, really, whether the market has priced in the so-called soft recession, hard recession, 75 basis points rate hike or 50 basis points. Is it ready to move on? I think we need to spend a couple more days looking at the US market to get that big answer on the mother market. Back in India, absolutely commendable the manner in which the bulls came roaring back. But look at what the yield market in India is also doing. Yesterday, we had a bit of a mini inversion even in India. Now, no one's screaming away saying that this is any sort of a recession indicator in this country. That's not how it works here. But it's interesting to note what's happening. This tightness in the money markets, even here in India. There was an auction of the 364 Treasury bill yesterday, and that's where the yield on that bill, which is short term, went above the long term, the 10-year bond yield, which was closer to around 7.47%, the 2032 paper. So the indicators here in India are that the money market's a little tight. But I think in terms of the larger picture on the US, Nigel, at least I'll want to, still hold out, look at that jobs data, and then see. The market right now is telling you, hey, let's move on. It's okay. We know this whole interest rate talk. But is it really that simple? I'd want to wait till, post-work Friday.
Well, that's right. And the Nifty yesterday did very, very well. What an outperformance we saw,
yes.
right? And the Nifty Bank was the one that led the charge yesterday. And clearly, we ended at the high point of the day because the Nifty Bank did a relative outperformance. Today, the IT index that yesterday didn't participate, it had an off day. Well, that could bounce back because the Nasdaq was a relative outperformer. Weekly expiry is what plays out today. And on the Nifty itself, positioning is such that the data suggests that maybe, in fact, the bears believe that 50 DMA is going to get protected on the Nifty. Can the bulls bring a surprise? If they have to do that, then the Nifty Bank has to play an encore. It has to do an encore today. Because the 50 DMA is around 100 points away from current levels, and the 100 DMA is close to around 350 points away from current levels on the Nifty Bank. So the Nifty Bank will give direction today to the markets, and the IT index will support as well. Moving to the F&O Qs, yesterday, one notable factor, particularly towards the end of trade, was the premium on the Nifty, which was 70, 80 points earlier. It came down to around 65. Yesterday, it came down to around 40 points odd. So clearly, there was some shorting at higher levels. And it was the FIs who were adding shorts. Yesterday, they added close to around 6,000 short contracts. Takes the short positioning to around 75% odd. On the option side, they bought more calls than puts. But in an uptrending market, you want to see more puts written than calls. And that's what happened yesterday. Close to around 5 puts were written for every 1 call. Let's run you through the options data then. The 17,600 put, well, that was getting written very aggressively, but that's a little far-fetched for now. At least for today, you're counting on the 17,600 level, definitely holding out. But the two strikes that did see a fair bit of addition were 17,700 put and 17,650 put on. On the upside, though, on the call side that has the highest open interest is a 17,800 call. It has more than 1 crore shares out there. So that's what I said about the positioning. The call writers, they believe that those higher levels are going to get defended, which brings us straight to the levels then. On the upside, 50 DMA comes in at around 17,850. But since there is writing at around the 17,800 call, you're expecting that 17,830 odd level to hold out. So that's a bit of a resistance zone on the upside. On the downside, though, the positioning is such that maybe the 20 DMA does hold out, which is a good 60 points away from where we closed yesterday. So we'll have to keep an eye on that. SGX Nifty suggesting a flattish start. Can the Nifty Bank do an encore? That's the big question. If it can, then we'll have a good session. Otherwise, positioning is such that we don't get past that 17,830 odd mark.
Okay, we have covered quite a bit of ground, right? In the last many days, it's over a 400-point rally that we've seen in the Nifty from the 2nd of March. So let's see how things go. I think the big question that everyone's asking now is the worst of the rate hike fears priced into the market already. Time will tell, but for now, let's tell you what's lined up in the next 2.5 hours. In the first half hour of the show, here's what you'll get to see. You'll get updates from the markets across the globe. And Ayaz Motiwala of QRC Investment Advisors, Nivalis Partners, will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis. Amisha Vora of Prabhudas Leeladhar will be joining in. All right, first up on the equities front, we have a comment coming in. Rhythm Desai of Morgan Stanley with his view. He says rising short rates, rich absolute valuations, worsening global liquidity, and offsetting institutional flows have probably capped stock indices. And there is, of course, they're overweight on discretionary, industrials, and finance, and they're underweight all the other sectors.
Okay, so let's move on to another call coming in. This is from CLSA, and it's a long-term macro call. Indranil Sengupta says that they add a second 25 basis points RBI hike on the 8th of June, atop the April 6th one, with their economists now expecting the Fed to raise rates by 100 basis points to 5.75% by the 26th of July. He says after the Fed pauses, RBI MPC should cut 125 basis points from Feb 2024, with inflation easing to 5.5% in FY24 from 6.2% in February 2023. He says this backs their call of the 10-year selling off to 7.75% by June and then falling to 7% on RBI OMO rate cuts by March 2024. With the Fed raising further, he sees the rupee ending FY23 at around 81 to the dollar, from 80.50 earlier. They retain their 79 to the dollar March 2024 forecast. Guys, you know what this tells me? A lot of commentaries like driving. Nigel, you and I drive. Sonia, you do too, right? It's like 100, 50, 50, 70, 70, 20, 20, 120. That's what it feels like
and
to
then
me.
crash.
Hopefully not.
Hopefully not. Okay, but let's get you some money market views as well this morning. First up, coming in on the currency front, Parul Mittal Sinha of Standard Chartered says the dollar INR has slipped below the 82 to the dollar threshold last week on equity FPI inflows, while central bank intervention limits the downside, with sharp resurgence in the dollar driving the dollar INR pair higher again. She expects the rupee to trade in a range of 81.75 to 82.50 next week. The focus remains on the positive March seasonality effects and the dollar moves, with the US data to be watched for further cues.
On the bonds, Parul Mittal Sinha says domestic yields continue to rise for the second consecutive week, tracking a spike in global yields on repricing of US rate hike expectations on strong data and hawkish Fed speakers. She expects the benchmark 10-year yield in India to trade in a range of 7.4 to 7.5% next week. Parul also highlights key data to be watched, which includes the US non-farm payrolls number, which is due tomorrow, and consensus estimates is of 224,000. India's CPI data is due on the 13th and is expected to come in at 6.4%, and the US CPI on the 14th, with consensus estimates pegged at around 6%.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. But the stocks that we're tracking today for you are Shriram Finance, Kirloskar Royal Engines, Bharat Forge, Sequent Scientific, Ramkrishna Forgings, Shopper Stop. Their stocks on the back of positive news flow, while on the flip side, you have Adani Transmission, Adani Green, Data Patterns, and Gokul Das. They're stocks that could react to negative news flow.
Right, lots coming up in the next 1 hour, but let's just set the context of the discussion that we're going to have right now. It is the rate hike fears that has caused a lot of the equity markets globally to see a sell-off. And as the Fed chair spoke, and I just quote, as I mentioned, the latest economic data has come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. It's on the back of this quote that most global markets sold off. Ayaz Motiwala of QRC Investment Advisors and Nivalis Partners will be joining in just a bit to give us his view as well. Ayaz, good morning and thanks for joining us on the show. That's the big question, right? What is the expectation in the March meeting of the Fed in terms of rate hikes, and how much of it you think is already priced into global markets, including markets like India?
Good morning. So it's been a little bit of a news sort of added surprise. I think people were optimistic, and which is where the markets had made this up move in the last, I want to say, about a month to two, where I guess the expectations were that we are, by the third quarter, we'll probably be done, with the rate hiking cycle, and then you may have a little bit of a sideways move. But that is on the prior data. Now that the inflation seems to be higher and more sticky, what you just mentioned is the current state of affairs. So this is a new piece of data, and the market is obviously a little surprised, and which is why we're seeing this reaction.
Ayaz, hi, good morning. I think the question everyone's grappling with is what is already in the price. There's a lot of chatter. It seems the consensus is now saying the Fed is going to peak at maybe near 6%. I don't know. What's your view on where the Fed peaks and how much of that is priced in?
Okay, so that is a little bit of beyond the scope of the markets we do look at honestly in terms of the factored sort of estimates. But clearly, I think the numbers are probably 50-100 basis point higher than what one is thought would be probably a number closer to 5% earlier. So I guess these numbers could be 5.75, 6 as a peak estimate. The other important point, and I was reading a piece on expectations, is that we've had a long rally in the U.S. markets. While we also note that markets like Germany and France are near lifetime highs also, right? So in the whole sort of melee of all this news and negativity announced, we also have these things sort of happening in a global context. Bringing this discussion back to India, where there is much more comfort to talk with a lot of more confidence on what's really going on. One factor which needs to be clearly mentioned is that we sort of did not sync with the 10-year low rates for longer or forever kind of situation, right? So India being a high inflation country, we probably I think did a low of 6.5 or a little around that in our 10-year rates, let's say, right? So for our market to price in this new move of the 10-year crossing the 4% mark, etc., may have a limited impact in the context of this whole repricing that is being talked about in the global context. And I think that's very, very important for us as investors to note and participate accordingly.
All right. Hi, Ayaz. Good morning. This is Nigel on this side. It's been a while since we have spoken, Ayaz. But, normally when you join us, you tell us about the top quality under-researched, less crowded stock that you'll normally look at. I remember the last time you joined us, we were talking about the auto ancillary space and the scope for exports. I think Suprajit was a stock as well that we discussed. What's the recent big idea that you'll have got into here in our Indian markets? You can name a few stocks if it's possible with due disclosures.
Sure. So top of the mind, is that, healthcare in the Asian context has always been a very, sort of bidded asset, even in terms of M&A or participation by private equity, etc. Right? So that's an area which now, after a 5 to 10 year period, or even a longer period, where I think the expectation on insurance and payment through that mechanism is really becoming frictionless, and we actually see that as a meaningful contributor to the overall revenue of sort of listed corporate hospitals, if you will, right? As one of the drivers for that sort of side of the business. So it's both sort of insurance, which interests us a lot. And within that, the impact on businesses as India and Indians get more insured, paying for health insurance, paying for life insurance, we see that as a positive impact on the on the food chain down the line as well. So those are the areas that we've sort of been working on and that interests us. And we've obviously seen a few recent sort of listings in terms of hospitals in the last couple of years. Slightly behind that, or earlier, sorry, have been the listings of a few insurance companies as well. So I think that part of it is what is looking pretty interesting. There have been some challenges in terms of the COVID situation. And so it's been, for us included, and the market, a difficult situation to try and pin down sort of near-term sustainable growth rate, the 1 to 3 year outlook. But I guess this could be the final year where we try and cite numbers of 19 and 20. And I think we all move on to try and compare businesses now on a base of 22, 23 going forward. So I think as these expectations sort of set in, and we get a sense of sustainable growth rates in the in the 3 to 5 year outlook, there will be much more clarity on how investors look and participate in these companies going forward.
Got it. Okay, insurance is on your radar. Ayaz, thanks a lot for joining in and giving us an update on what's happening globally as well as what you like in our markets. Thanks for stopping by. Well, that's the word coming in from our global expert. Let's dip into a quick break. On the other side, lots of stocks to watch, so don't go anywhere. Our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Well, yesterday was a really good day for the market. What a recovery we saw. And this morning as well, global markets have staged a good recovery overnight too. The Dow recovered quite a bit from its lows. The SGX Nifty is suggesting a flat start, but let's see which way it goes. For now, lots of stocks in focus this morning. Let's get straight to it. Vivek is joining in first up with some data on the Adani Group stocks. Vivek, over to you.
Well, good morning. So in an exchange notification last evening, there's been an additional pledge that has been created in two of the Adani Group stocks. So Adani Transmission as well as Adani Green, there has been an additional pledge creation. In Adani Transmission, there's 0.76% further creation of pledge, and this is again towards SBI Cap Trustee. In Adani Green, there's a 0.99% additional pledge that's been created in favor of SBI Cap Trustee. Now remember, on February 8th of 2023, there was an additional pledge that was already created, and 1.6 crore shares towards the entire group was actually done. And at that time, the SBI chairman had clearly mentioned that this was mainly used as top-up collateral for existing loans. And in fact, the additional pledges were not for a new loan or any new pledges, and this was something that was quite clearly mentioned. Now, in fact, on February 13th, there was also a small release of the pledge. So, the overall pledging of shares as well as the share-backed financing in the Adani Group continues to remain in focus, going with the red on both of these names.
Okay, all right. Thanks a lot for that, Vivek. Let's hop across to Nimesh. He's here to tell us about a couple of large trades that took place yesterday, and he had given us a heads up as well that it was likely to happen. Nimesh?
Hi, Nigel. So, as you rightly pointed out, two large blocks, Shriram Finance and Kirloskar Oil, and that actually had an impact on the FI data as well in yesterday's trade. Coming on Shriram Finance, there was a large confirmation of APEC partner was a seller, largely a clean out trade. So they sold close to 3% equity in Shriram Finance yesterday, and the big buyer was Capital International. Across two of its funds, they bought close to 70 lakh shares. The total deal size was 1,400 crores, and that got reflected in the FI data yesterday. The second was Kirloskar Oil. Again, in that stock, a big overhang is out of the way. One of the promoter entities sold close to 13% stake. Even in Kirloskar Oil, there was a mix of domestic mutual funds and insurance companies were buyers. So Nippon AMC, DSP Mutual Fund, Birla Mutual Fund, Max Life, all these were buyers in the block deal, and the seller was Kulkarni family. So even in that stock, the large overhang is out of the way, and hence both the stock recovered in yesterday's trade and will go with green in today's trade as well.
Okay, got that, Nimesh. Thanks very much. Vivek, you're watching for a couple of stocks, data patterns and Gokuldas. What's the news?
Well, good morning. So two source-based stories, data patterns. We understand that the company has launched a QIP, and this QIP is to raise almost 450 crores. That is the base size of the deal, and upsize optional of further 50 crores is something that is there. And we understand, the management had alluded to this likely QIP, in the conference call as well. We understand that the floor price for this particular QIP is 1,284.5 rupees per share. Interestingly, Gokuldas Exports, one promoter entity, Clearwealth Consultancy Services, we understand is likely to sell almost 8.25% stake in the company. So the block deal size is over 230 crore, and the floor price for this particular block deal is set at 390 rupees a share. Over 4% discount to yesterday's closing. Now remember, at the end of the December quarter, they held over 20.5%, and even in the past, they've been paring down their stake. It'll be interesting to see, who are the buyers in this particular block deal. Quite a large block deal as far as Gokuldas is concerned.
Okay, all right. Thanks a lot for that. Well, the other stock that we are watching this morning is Bharat Forge. Now, I'm expecting the stock to be in the green. The company has announced an e-bike manufacturing facility at Chakan in Pune. Now, this facility has a production capacity of 60,000 units per annum currently, electric bikes, and that can be scaled up to 100,000 units per annum. So this is positive for them in terms of earnings potential. They will undertake this assembly of electric bikes for Torque Motors Private Limited, which is 64% owned by Kalyani Powertrain Limited. So I'm going with green for Bharat Forge. I'm going with green for Kalyani Steel, as well as it may mean more business for them as they put together, electric bikes for Torque Motors. So going with green over there.
Okay, all right. We'll keep an eye out on that group. Then Mangalam joins us to tell us about Shoppers Stop. Morning, Mangalam.
Good morning. So Shoppers Stop has made an announcement. They've entered into an agreement for distribution for a Japanese brand called Shiseido. Now, Shiseido is a popular Japanese beauty brand, very old. I mean, 1872 is when it was launched, so about 150 years old. They will launch the global makeup brand called NARS Cosmetic in the second half of this calendar year, right in time for the festive season as well. While this is a positive move, something that could limit the gains is the fact that there's not an exclusive arrangement with Shoppers Stop. In fact, I just did a cursory Google search, and Shiseido products are available in India on Nykaa as well as the Sephora platforms. So it'll be interesting to see what is the incremental sale that can come by from Shoppers Stop to Shiseido, but more importantly, from Shiseido to Shoppers Stop.
Okay, Mangalam, thanks very much. So interesting. There seems to be a gold rush underway when the beauty, when it comes to the beauty business.
Yeah,
So much going on.
I'm a big fan of NARS products. I'm so happy NARS has finally come to India
There you
for
go.
the longest time. But
Now we know where the demand is coming from.
But as he said, right? I mean, Shiseido products are also going to be available on Nykaa. So it's not that you can.
Where will
just have
you
to go
buy? Shoppers Stop or Nykaa? That's the market
That's
question.
in the
I have Nykaa on my phone and I have Shoppers Stop next to my house. So I have both the options available.
All right, well, let's move across to Ekta. She's here to wind this down with other stocks around the news. Ekta?
Thanks for that. Well, I'll start with Sequent, where they've terminated an acquisition which they had announced on November 7, 2022, which is basically Tineta Pharma. It's an India-focused livestock company. The acquisition was for an enterprise value of around 218 crores. Ramkrishna Forging is the other one that I'm looking at. Wholly owned subsidiary is formed for the company, which is RKFL Engineering, and it was incorporated on 6th March 2023 to implement the resolution plan under CIRP for GMT Autos. So these are the two stocks that I'm watching.
Okay, thanks a lot, Ekta, for that. Here's a quick recap of our top stocks. Stocks with positive news flow. You have Shriram Finance, Kirloskar Oil Engines, Bharat Forge, Sequent Scientific, Ramkrishna Forgings and Shoppers Stop. While stocks with negative news flow, there's Adani Transmission, Adani Green, Data Patterns, as well as Gokuldas Exports. All right, we'll also get a quick handle on what's happening in the world of commodities. There's lots there. Brent crude has been on a downslide for the last few days. Manisha Gupta is joining in for a roundup of all the action. Manisha, as we head into the March end meeting of the Fed, I guess it's going to be like this, a bit volatile in the commodity markets?
Oh, well, absolutely. Yes, it's going to be very choppy. And, ahead of that, you have the U.S. non-farm payroll data coming in on Friday. So that would really set the direction on how we see the week ending and the next week beginning. But as you rightly pointed out, yes, we have seen choppy moves here. And the crude oil prices have continued to decline. Today is the third straight day of a downtrend. And we have seen 5% of a decline come in for the crude oil prices in this week itself, even as the U.S. inventories snapped the 10-week of inventory build-up. And the stocks did gain by 1.69 billion barrels. Even then, there has been no support here, really. On the other side, you have precious metal prices, which also have continued to decline. Silver is trading at a 4-month lows, gold at a 2-month lows as well. But some support is what we saw in the last 24 hours come in for the metal prices. So copper saw some strength. Steel and iron ore are back around those 7 to 8 month highs. China has confirmed on further stimulus to infrastructure and construction sectors, and China also enters peak construction season as we head into the next quarter. So those are some of the factors which would be supportive for the industrial metals to begin with.
Okay, got that, Manisha. Thanks very much. We'll keep all those cues on the radar. Quick break at the moment. On the other side, Amisha Vora of Prabhudas Lilladher joins in. We'll discuss a couple of interesting stock ideas with her. We will also connect with J.K. Arora of Som Distilleries and Breweries to discuss their business outlook. Stay tuned. Welcome back. You're with us on Bazaar, and of course, we're coming to you from the CNBC-TV18 Motilal Oswal studios. Let's quickly get the SGX back up on the screen. Not that it's giving us too much of a clear indication. Trends are very, very flat this morning. There we go, just around 25 points down now. That's what that index is indicating. Let's get the chat going with Amisha Vora, Chairperson and Managing Director at Prabhudas Lilladher. Amisha, thanks very much for joining in. It's been an interesting pullback from the market, right? What a pullback in style, if I could say, last 2 or 3 sessions. Before we get to stocks, in your own sense, do you think the worst of this sort of downturn is over? Do you think this pullback is a sustainable one? Or would you still keep some cash on the side?
So I thought that 17,200 and around, where market took a good support, which is a very, very good sign. That's very well respected for the time being. I do feel for the year 16,500 and 19,000 could be the kind of range, but this time it took support at 17,200 when there was a lot of chaos. I think it's a very, very healthy sign. And I think it will be respected for quite some time. And also that now as we see markets are gaining gradually strength, particularly also in Bank Nifty, Bank Index, and some of the larger market participation. So I am feeling very constructive about it.
Okay, since you spoke about the bank index and the bank Nifty, Amisha, good morning. Let me take that discussion forward. This is Sonia here. IndusInd Bank was a big mover yesterday, right? There's a lot of talk about the extension of the CEO's term, Sumant Katpalia, and that lent new vigor to the stock. How are you feeling about IndusInd now, and any other banks that you like, that you would add to your portfolio now?
So IndusInd for sure, because I think he did a very good job, and extension was awaited by markets to continue to have consolidation in the work that is underway. So in terms of valuation, still it looks attractive. And I think given next 2 to 3 years perspective, the business, the book, both will be consolidated well. So apart from the frontline private sector, which is HDFC and ICICI Bank, both of which we are positive on, selectively we are also positive on Axis and now IndusInd. But also we continue to be positive on PSU side, which is SBI and Bank of Baroda.
Okay, all right. Hi, Amisha. Good morning. Always good hearing your thoughts. Amisha, yesterday Shriram Transport, Shriram Finance, that stock was in focus because there was a large trade that took place. Now, post-market, we understood that, in fact, Dynasty was the one that sold that 4% stake in the company. The problem is, still, Piramal has close to around 8%, and that will be a bit of an overhang on the stock. What's your view on this company?
Frankly, Nigel, I haven't studied this from a fundamental perspective so well to be able to comment at current market price on the prospects. So I would rather give it a pass, frankly.
Okay. What about a stock like Bajaj Auto, particularly for the auto space? Now there are increasing reports that maybe the worst of the export slowdown is behind them. And, they have a lot going for them. There's a new EV launch in the three-wheeler space. There's the Chetak, which is picking up in terms of production. Do you think some of these laggards could be the leaders of the next rally?
So, precisely because of that reason, I would think that there could be a good downside protection in some of these names and a trading upside. But on a broader basis, particularly in two-wheeler, my view is that over next, 2 to 3 years, it's still an open game where we don't know who will settle with what market share. It's all open for anybody to grab kind of a situation, maybe not next 2 to 3 years, then maybe next 4 to 5 years. But in that situation, when the established market leaders are challenged by new technology product, and that can come from any count, I think that I would not like to enter at a very high PE, which both these players still have, but in an intermittent way, because the pain has been both in, for example, in Hero because of the rural pain, and here because of exports. When that tapers off, there could be a intermittent upsides.
Okay, all right. Amisha, stay with us. We'll come back to you. By the way, we have some news that's flashing for you on the screen, which has come on the exchanges. And Relicare Enterprises will be the stock that's in focus. I think this is one of those big triggers that the street was waiting for on this particular counter. The stock has seen a sharp correction from close to around 200 rupees, I think, to around this 150 odd rupees. Relicare Finvest has completed the one-time settlement of more than 2,000 crores with lenders. Remember, this was a queue that the street was waiting for the past couple of months, actually. And that's finally come about. So expect that stock to react positively. And we'll try to get in further details. Maybe the management as well will join in the next couple of hours or so. But that's positive. We'll keep an eye out on that stock. We'll try to get you more details. But let's turn our attention to one stock that was buzzing in trade yesterday. Som Distilleries and Breweries. Well, that was up close to around 10% by the time we wound up. The street was factoring in some part of good news. Maybe it was the capacity expansion that's coming on stream. Or maybe, in fact, the scorching summers, increase in consumption. But to find out more, Mr. Arora, the MD of the company, joins us on the show. Hi, Mr. Arora. Thanks so much for joining in. Well, yesterday there was a lot of excitement on your stock. And one factor that could have been playing out is that 100 crore capex expansion that you have announced. Could you give us a couple of basic details? What is the asset turn? That's what kind of revenues you can generate from this particular investment, and when does it go live?
You see, we have three major manufacturing units. One is in Odisha, one is in Karnataka, one is in Madhya Pradesh. In fact, all three units have took place the expansions, and there is a major after COVID. There is a now major breakout in the consumption. So there is a lot of shortages of the stocks in the market, which we have tried to capture this year. And as it is, the brand is for the whole 9 months. We have been growing.
Right. Mr. Arora, let's just focus on this expansion that you're talking about, and we get that point about the increase in consumption. So how much are you spending on this expansion? I think it was around 100 crores. Does it go live in the first quarter of next fiscal? And what kind of revenue can you generate? Give us those basic details.
This is about, for this 100 crore expansion, about three times the turnover will come. You know, this 300 crore will be added in the coming fiscal. So this thing, the major thing is that the industry is growing at the rate of 8-9%, and we are growing at the rate of 100%. If you see the 9 months figure, so our growth is this thing. So in the last 2 years, from 3.5% we have reached to a 10% market share of all India, with operating only on about 13 states. So there are another.
Arora.
Yes.
Mr. Arora, so we got that point. So just want to get into some more specifics to understand how the business profile will improve. You're saying that, you know, on this 100 crores capex, you will get 300 crores of revenue, and you will book that in FY24, if I understood it correctly, right?
Yes. Very clear.
So tell us this. I mean, if I look at the trailing performance of the company, pre-COVID in 2019, you were at around 400 crores of revenue. 2022, you were at 363. Give us a sense of how you're likely to close out FY23. And then 300 crores you're saying will come from the capex itself. What about the existing business? I mean, are we looking at a quantum leap in the top line? I'm just trying to understand the top line profile and how it shifts from the end of this year into next year.
From 325 crores approximate to, we are touching this year about 700 crores for March, this thing, and next year it's more than 1,000 crores. It's simple.
More than 1,000 crores. Okay, that's really interesting. So the top line is growing in a very, very impressive way. Give us a sense of margins, because again, if I look at the track record, obviously COVID, a lot of issues happening. Margins have been very patchy. I mean, 2019, 13%, 2022, 5%. Give us a sense of what happens as this capex comes on stream, pricing, you know, glass, all of the inputs, everything put together. What happens to the operating margins?
If you see the last 10 years record, we have got the best track record of the margins as comparison to the industry. You compare all parameters of the industry and ours, except the COVID period. This year also, this about 13 to 14% margins is coming. So this has always been a steady margin with the company, all except the COVID period. So
so you're saying, Mr. Arora, that 13 to 14%.
Top line, but
sure. So 13 to 14% margin is the band, right?
Yeah.
Okay, got that. Can you tell us a little bit about the debt as well? How much do you plan to do in terms of fundraising? By when will you raise the funds, and how much of that fundraising will be used to retire your debt? If you can just give us the numbers.
You see, the debt, we have not debt at the same level. Whatever expansion is we are doing, it is all out of the internal accruals and the right issue we have just this thing. So there we are not increasing the debt. So this is all internal accruals and the rights issue we are taking up.
Okay. So how much will your debt be? Your debt is currently around 150, 160 crores. In the next 1 year, are you planning to bring it down, or will it be at this level itself?
No. This year we have taken the expansion, so this is going to be the almost at the same level. We are not increasing that this thing. Though turnover is going to be in 2 years more than double, but our is not going to be increased.
All right.
Debt will not go up.
Mr. Arora, so debt will be constant. Very quickly, your promoter stake has been moving up from around 25% to around 32%. Do you have plans of increasing it further from here? If yes, where is that number headed?
Yes. We have the target of reaching about 51%. And
by when?
Whenever
you can, you know, Mr. Arora, you can buy only around 5%, I think, in a fiscal year.
That's the limitation. So we are following that. We have the only authority to have a creeping acquisition of about 5%, which we are doing. So,
So you want to take it to 50%, and just to reconfirm, I'm looking at your presentation. Your market share last was 3.5%. You're saying you've gone to 10%. Did we get that number correct?
Yes. And next year we are planning to have it up to the 15%. With the mind it is within the half the states of the country, and the market share is of the all India.
Okay, so, all India market share, expecting it to rise to 15%. Got that. Thank you, Mr. Arora, for joining in and giving us all of those details. Very helpful there. That perhaps explains the reason why the stock has seen such a big up move in the last 1 year or so. Just pull up the 1 year chart. Amisha Vora still with us. Amisha, quick comment on this. I mean, this stock is up over 200% in the last 1 year. Any thoughts?
Frankly, the way he is talking about aggressive top line growth and gaining in market share, and the space we all know is a very good space. So it looks very interesting. I do not have much, earlier idea about the governance, etc., etc. I'm sure it would be in place, but the growth and the space both look, after your interview, extremely attractive to me.
Okay, Amisha, thanks a lot for joining in and giving us an update on a lot of stocks. Have a great day. That's Amisha Vora. Let's slip into a quick break. On the other side, we have Mitesh Thakkar and Sudarshan Sukhani. They'll be joining in for some technical tips. Stay tuned. Welcome back. Well, as we've been telling you, the Nifty has gained for the third straight day yesterday, and now the Nifty is up over 400 points from the 2nd March low that we hit, which was about 17,300. Anuj joins in for a quick trade setup. Anuj, that's the big question everyone's asking, right? Is the worst of the rate hike fears already priced in? But what's the sense you're getting about whether the market is all set to break out of this range between 17,300 to sort of 800?
Yes, good morning, Sonia. Good morning, Surbhi and Nigel. Well, yesterday the market, aced the test. We said yesterday morning that there's a bit of a test for the market, and the market beautifully passed it, and maybe it deserves a day off after that. We have a fantastic day yesterday. Bank Nifty led the recovery from the lows and closed at day's high. I think today being expiry, it could be an option writer's day, and you don't want to dabble too much on days like today. The Nifty is very close to negating a big bearish trend. For that, it will need to, of course, close above some crucial levels that I'll mention. But the market has clearly shown you that it will fall now only if the news is really negative. I mean, just the fear of rate hikes alone won't take the Indian market down, even if global markets are down because of that. But as I said, the market faces some crucial resistance now, 17,825 to 850. It was a zone from where the market actually had the bigger fall in February, and it's also the 50-day simple moving average. And also, if you go by the options data, where you have the highest open interest is 17,800 call with the premium of 20 rupees. So, all things considered, not a zone in which you want to initiate a fresh low. You want to see if the market is sustaining this or not. And the Bank Nifty is interesting because that's been the go-to pocket. And if one index can take Nifty out of this range, it's Bank Nifty. It's shown signs of that. Yesterday also, the dips were bought. And my sense is if you take out 41,800 and close above that, then straight away the next level to watch will be 1,000 points higher at 42,800. That's the internal strength of Bank Nifty right now. Decline only happens if you start to break 41,350, but that's not my base case. I think the Bank Nifty leads the market out of this range.
Anuj, I think your tie color, maybe my dress color today is kind of telling us the market's mood, but I don't know. I was telling Nigel, I want to still hold my breath till we see that jobs data and see whether the worst of this, falling on the interest rate hike fears, whether that's behind us or not. But take your point, absolutely.
You know, in US right now, you can leave a job and you will have another offer literally in 1 hour. It's that good, yeah. I mean, everyone has 2 jobs already for the job that they're doing.
Recession? What recession are you talking about?
That's what they're saying, that, you know, it will have to be a forced recession. And that is why, you know, you maybe over the next few weeks or months, you will hear a lot about front-loading more rate hikes so that, you know, you can purposely bring the economy into recession, maybe because that's the only thing which will sort of puncture this inflation sort of bubble. But I mean, jury's out on that.
Sure. Okay, all right. Thanks very much, Anuj, for joining in with some of the thoughts on the market today. Let's take that forward with our technical experts. We have Sudarshan Sukhani as well as Mitesh Thakkar joining in with the latest. Gentlemen, good morning. Great to have you on the show as always. Let's start with how you have read the pullback. Sudarshan, your thoughts on the index now and whether it still gives you the comfort to start off with a long trade?
Good morning. Well, yesterday when we had that morning gap down, I had said we should buy the gap down because this is a buy on dips opportunity. So that view continues. The market, the Nifty is in a short-term uptrend, and we want to be only long in this market, not take the other side of the trade. Now, there are some days when the markets become choppy. So that doesn't mean that the buy trade is not existing. It's there. You just identify a proper location when the market is sideways, when there is a correction, intraday correction, and go long if you're not still long. But the trade now is to look for the Nifty to reach levels somewhere between 17,900 to 18,200. Slowly, of course, but then you have to be on the right side of the market to get that level.
All right. Yes, Sudarshan, you did mention yesterday, look to buy the dip, and that worked out brilliantly. We got that. Well, let's hop across to Mitesh. Mitesh, what about you? What's your take on the indices, Nifty and Nifty Bank?
Morning, Nigel. Yesterday morning, again, the idea was that the dip should be bought immediately. And I said that it might still take some effort to get past 17,800. I've been highlighting 3 important factors. One, it is the 61.8% retracement level of the fall from 18,130 to about 17,255. 2, there's a gap down, and 3, there are moving averages. So I think the idea is that for now, it remains a buy and dips market. If you get any intraday dips of 50, 60 points, most welcome buying time. But otherwise, aggressive buying can be done if we see a breakout above 17,800. But the overall bias is on the positive side. But since yesterday, we've been, or rather, the day before yesterday, we've been having clearly more and more long calls on the stock side. Even today, I think we've got all 4 buy calls. So trade with long bias. The only thing is that until 17,800 is crossed, you might have 1-2 days of intraday volatility, which will give you a better entry point.
Hey, what about individual stocks? Sudarshan, good morning. What are you looking at in terms of, the movers in this market? Even if we do break out of this range, right? What could be the leaders of the next rally? And purely for today, what are the stocks to watch?
Leaders of the next rally will be banks and Reliance. So, and I think the IT will slowly participate. So you know the names, the best companies are always leading. That's not going to change this time. Now, for today, I think Dabur is an intraday short, and that's my only short sell. Dabur is an intraday short. It's been falling. It's not. It's underperforming. So just look to go short with a stop over 537. Hind Petro is a buying opportunity. That stock is just perhaps completing a correction. Buy with a stop under 215. NBCC is a buy. NBCC is a low price share, but it's a PSU. It seems to be giving the sense that it's now ready for a big move on the upside. Buy with a stop under 34.5. And Reliance continues to be a buying opportunity. I don't give a stop for Reliance because you have to take this as a positional trade. So if you have an intraday correction or dip, which is possible today, go and buy Reliance.
Okay. All right. Sudarshan, Mitesh, what about you? Individual stocks?
I have all 4 buy calls today. Eicher Motors looks like it's completed a correction and now is on the verge of giving a good, strong reversal and a pullback. So that's a buy with a stop at 31.74 for a first target of 32.60. A buy on Indian hotels. Here, I would recommend a stop at 321. Look for 340 as the near-term target. Bosch is something which I've recommended earlier as well. At current levels, it's broken out of a consolidation. So fresh buy with a stop at 18,400 for targets of 19,500. And Petronet had some kind of a good positive price volume action yesterday. Could see follow through. That's a buy with a stop at 225 for targets of 240.
All right, gentlemen, got that. We will take a very, very quick break on that note. Come back on the other side. We'll have the pre-opening rates. Also, we'll be joined by Nischint Chaute of Kotak Institutional Equities. We'll talk about the insurance sector numbers, the latest ones for the month of February, in just a bit.